how to trade stock options for beginners. In this video, you're going to learn how to trade stock options, and you're going to learn the simplest and the best strategy to how to make consistent profits in the stock market. My name is David Jaffe from beststockstrategy.com. I'm here to show you the only replicable strategy that you can use in order to earn consistent money. So let's get to it. All right, first of all, you have to forget everything that you've been told. All right, seriously. All right, I worked on Wall Street. I graduated from an Ivy League university. I worked as an investment banker for 5 years. I've completed $5 or $10 billion worth of transactions. And the reality is that I can teach you everything about how to make consistent money in the stock market in less than 5 minutes, as long as you have an open mind. So the way to do it is you have to pretty much sell put options, and you have to keep things extremely simple. So for example, if you have an account that's like between $0 and $10,000, you should trade a maximum of 1 or 2 securities. And they should be large cap stocks that have that are market leaders. So you trade a Facebook or an Amazon or an ATVI, which is Activision in the gaming industry, or a Lockheed Martin or a Boeing. That's it. You just follow 1 or a maximum of 2 securities, and then you place trades on that. You would then get comfortable with the trading range of that stock. So for example, right now Facebook is trading at around 175. Its normal trading range is between 170 and 180. Once it falls to the low end of that range and it starts trading at around 172, 171, even intraday, you can then sell a put option on Facebook. One contract is equal to 100 shares. You would choose an out-of-the-money strike that's around 157.5, 158, and then you would get paid in order to assume that risk. What that put option requires is that when you would choose the 150, let's say you choose a 158 strike and you would get paid $1 for that. That means that you would get paid $1 per share. One contract is 100 shares, so you get paid $100 in total. And if Facebook does not drop below $158 on your expiration date, then you collect that and you keep that entire amount. So you essentially turn yourself into an insurance company, and you're also acting as the casino and not the gambler. You're not trying to guess prices. You're not looking at a chart and then using misattribution and saying that you can, tell future price movements by analyzing 3 charts. That shit doesn't work. All right. The reality is, put the odds in your favor and learn consistent methods for you to make legitimate and consistently profitable profits. You can use this skill for life, because you're going to end up winning on 90 to 95% of your trades. And as long as you don't get too greedy and you don't trade too many contracts, you can easily use this skill to earn 50% every single year. So, all right, let's just go over it real quick, all right? Let's say you're going to choose a maximum of, keep things extremely simple, 5 securities, all right? You're going to choose Facebook, Amazon, you're going to choose Lockheed Martin, you're going to choose Boeing, and then let's say you're going to choose, for diversification, you'll choose GS, which is Goldman Sachs, and then maybe you choose ATVI, all right? I would really only recommend that you have that you have these 6 securities and you trade all of them if you have a multi-million-dollar account. No joke. If you have anywhere below 10, if you have 0 to 10,000, you should trade 1 security. If you have 10,000 to 50,000, you should trade 2. If you have 100,000 to 500,000, you should trade 3. If you have 500,000 to like 3 or 4 million, you should trade 4 or 5 maximum. There's no need for you to be overly diversified in these market leaders. Like for example, I look at Facebook and Amazon as pretty much one company. It's tech. Lockheed Martin and BA, that's also one industry. So here at Goldman, that's finance, and then this is ATVI is gaming. So you effectively have 4 separate industries in here. I generally like to have positions on both Facebook and Amazon because they're some of the biggest companies in the world, but I usually have positions on all these. But in any case, let's take Facebook as an example, all right? You're gonna sell a naked put, and the reason when you sell naked, it actually restricts you from trading too large because it uses up your buying power. I can't even tell you how many people tell me that trading naked options is risky, when the reality is that the people that they hear that from are not successful and profitable traders themselves. So take your advice from good traders who actually make money. You want to trade naked options because it gives you the maximum amount of premium. It also inherently prohibits you from trading too many contracts. And the third thing is that, God forbid, that something happens and Facebook experiences a large drop like it did in July of 2018 and it drops $40 a share, then you can easily roll and manage that position. If you're using a vertical credit spread, which means that you would sell like the 158, but then you would also spend money to buy a lower price strike option and a lower price put option like a 150, a lot of your money when you go to roll that position is going into buying that lower price put option, and you don't want to do that. You want to spend your money when a position is challenged to either reduce the size of that position or reduce the strike price to a more favorable strike. So for example, if Facebook got challenged at 158, you can easily roll it forward by a month and then reduce it from, let's say, 2 contracts to 1, or reduce the strike price from 158 to like 154. But if you're trading a vertical credit spread, a lot of that premium and that credit that you're going to use to reduce the strike or reduce the number of contracts is going to go into buying that throwaway put option that you're going to then buy at like 145 or even 150 in order to reduce your buying power reduction. So the short summary of everything I just said is make sure you trade naked options. So in this option, in this example, going back to Facebook, all right? Facebook right now is like 175. Its trading range has been, like, for the past 3 weeks, a high of, let's say, like 182, a low of, let's say, 170. When Facebook falls to like 172, you sell puts, you choose an expiration that's about 6 weeks away, and you choose a strike of around 157.5. All right, in exchange for this, you would probably get paid around $1.20, which works out to $120 per contract that you sell, and the probability that you're going to end up keeping that entire $120 is about 95%. That's how you make money in options. That's it. We don't try to buy call options. We don't try to be price guessers. Occasionally we'll sell a call option, but it's pretty rare because a lot of times that you sell calls, you're going to end up getting challenged on the upside. 80% of the profits that I make are by selling put options. The real trick to making money in the stock market is actually to have incredible discipline. But the reality is that people think that they're super smart and that they're special, and they don't believe the words that I'm telling them. So instead, they'll take the strategy that I tell them that has been successful for me, that I've used, and they'll try to modify it, and they'll think that I'm not telling them the truth, or they'll try to get cute and modify the strategy and things like that. Let me tell you something. I have OCD, obsessive compulsive disorder, and I am completely fanatical on being the absolute best trader. Let me just say that the probability is extremely low that any modifications that you make to my strategy are going to end up helping. Keep it simple, be extremely disciplined. Don't get involved in trading Nvidia or Netflix or Tesla or anything like that. Those companies move too much. You're gonna get challenged on the upside, you're gonna get challenged on the downside. It's just not worth it. All right, so stick to the strategy and learn how to make consistent profits for life. It's not that hard. This is David Jaffe from beststockstrategy.com. If you wanna sign up and become a member and subscribe to our trade alerts, we have a special going on where it's only $19 for 7 days. And if you have any questions, leave a comment below. Please like, comment, share, subscribe to this channel. I put out a lot of content, and if you have any questions, let me know. Thank you.